How would you like to be able to build wealth investing in stocks and options? Fadi Habib will tell us how. He is the founder and CEO of Legacy Wealth Builder Academy, where he helps busy professionals build sustainable wealth and generate income through strategic options investing. So Fadi, please tell us, how can entrepreneurs get started to build wealth with investing in stocks and options? Welcome to Awakened Titans podcast with Lily Patrascu. Mind-blowing conversations with influential business titans sharing how you can manifest abundance, love, joy, success through quantum awakening, quantum manifestation, quantum healing, quantum miracles, exponential business growth, and innovative products and services.
Happy to be here first. And I think the first thing we should talk about is some of the myths that people have or some mistakes that people have when dealing with the stock market. By the way, I'm a real estate investor myself. And one of the needs that I had was trying to get a little bit of more cash flow. Now in Canada, we're having a big problem in terms of increased mortgage rates, and a lot of cash flowing properties are not cash flowing. So this is just one way of getting some cash flow. So the first mistake or first myth, Lily, is a lot of people treat the stock market as a big casino. And that's why we always hear a lot about people losing money, because there's no system, there's no strategy. They're just buying something and hoping that it's going to go up. And they're very fearful that when it goes up and down. So the first thing is we need to treat this as a business. We're buying businesses. We're not buying lottery tickets. And when we, as a real estate investor, when I go and buy a property, I need to ask a few questions. I need to do my due diligence. I need to ask if the property is making money. Is the location good? What is the rents in the area? What are the expenses? Is it cash flowing? What is the cap rate? All of these stuff we as real estate investors do when we buy a property. For some reason, people, when they go and buy stocks, they don't do any of that. For me, only 1% of the 6,000 companies' stocks in the US market is investable. A lot of them are not making money. A lot of them, they don't have enough earnings. So we need to do our due diligence. It's not a casino, it's a business. That's number one. Number two, a lot of people also, when they think of the stock market, they think it's a get-rich-quick scheme. They want to buy something and they think that it will double in price in a month or so. It's not. There's a system. And if you look at, for example, Warren Buffett, one of the gurus there, he's a multi-billionaire, but he's only making 20% a year. And because he has a system of knowing what is a good company, he needs a little bit of education. And what makes a company good or bad, there's a way to do it. It's an easy way. And basically, if the price of the stock is cheap or not, again, has nothing to do with the price of the stock. The stock can be really expensive, but it's actually cheap. And another stock can be really, really low, like $1 or 50 cents, but it's very expensive. So the second thing is, it's not a get-rich-quick scheme. It is something that if you have a little bit of education on, you can make a lot of money from. Third is that people sometimes don't have a strategy. What they do is that they buy something, or some of their friends told them to buy something. Imagine if you just buy a property because your friend told you, yeah, Lily, go buy this property. It's not luck. There's a way to do it. And again, it's a business. It's not. I actually have sympathy for people because nobody really taught us how to do real estate, to do options and stocks. So it's not luck. And also, we need to understand that the risk and reward are both the two faces of the same coin. So if you want to go and chase day trading, which is a lot of people on the internet, I see a lot of ads of, I made this $100,000 in a week, and all. Nobody will give you that much ROI if there's no risk. So I'm not interested in losing money. I'm not interested in gambling with my money. It's a way that to balance risk and ROI. And coming back to options, do you want me to explain a little bit what is options?
Yes, please. Okay.
So options comes from the word option. An option means that you can go right or left. You have the option of going right or left. So option means, let's say, for example, Lily, if I tell you, Lily, sometimes I feel down, and I'm going to give you $10 if you agree with me on this agreement, that anytime I'm down, I'm just going to call you or maybe not I'm down. I just have sometimes I get some business ideas. I'm going to give you $10, but in the next month, I have the option of calling you at any time to run this idea by you and get your opinion. Okay, so just an option that I can exercise or not. So if we went to this agreement, I'll give you $10, and for the next month, anytime I have a business idea, I can call you and we can talk about it. So that's basically an option. Options basically in real estate means that the option can have a buyer and a seller. The buyer of the option is the one who has the right to exercise the option or not. So in this interaction that I did with you, I am the buyer of the option. I bought an option of calling you at any time in the next month. And you are the seller. You sold me an option. And for that, because you sold me something, you got $10. So same thing with options. If I sell a put, for example, basically, it's like insurance. If one person has a stock, let's say XYZ stock, and this stock is good, and he bought it at $200, but he is so afraid that the stock will go down to 190. So, and he knows that I like the stock XYZ and I collect XYZ. I buy XYZ all the time. So he can call me and say, Fadi, I know that you want to buy XYZ. And I tell him, yes, I want to buy XYZ. 200 is a good price. He tells me, can we have this agreement that if the stock goes down to 190, you will buy it from me? And I say, that's really beautiful. I already wanted to buy it at 200. If you sell it to me at 190, I'm so happy to buy it at 190. And he said, Fadi, that's not all. If you agree with me to do this, I will actually pay you $5. So in this scenario, this person, let's say Bob wants insurance that the stock, even if it goes down below 190, that he's not going to lose more than the $10. I am a seller of the insurance or the option. I sold the insurance to Bob. I can buy the stock if it went down below 190. And for that, I'm getting $5, which is the income generation. Basically, this method can create from 2 to 5% ROI per month. And if done with the right proper risk mitigation strategies, the balance of the ROI and risk are really, really good. So that's very simple. It's not a little bit of Chinese. It's not easy to grasp in the beginning, but once you learn it, it becomes really second nature. I will never stop doing options because it's really good.
Thank you. So tell us, how could someone understand more about options? Is it that they would copy exactly what you tell them to do, or is it that they would get some education from you and then they would kind of figure it out themselves? Or how would someone start doing the right thing in terms of options?
Okay, so it starts with education. So I do have a course, I do have a 12-week mentorship program. Options is not something you dabble with or you risk your money in without learning, because if you don't know what you're doing, you can actually lose a lot of money. So yes, I do have a 12-week program. And what we do in this 12-week program is that it's not only the theory that you understand and become second nature. People actually have to train on what I do in something called a paper trading account. And a paper trading account, Lily, it's an account whereby you trade, you invest, but the money is fake, is monopoly money. So the brokers do this, like IBKR, for example. Anybody can open a paper trading account in IBKR, and you will go through all the steps. So you will do the things like normal, but if you make money, you're not going to take the money. And if you lose money, it's not your money. So they give you $1 million of monopoly money, and it's a beautiful way of training. And I always tell people that you have to start with paper trading, regardless of your capital, regardless of what you think you know or not, regardless of what you think you're smart or not, because some people tell me, Fadi, I know I'm going to get this. I'm going to start live trading in about a month. And I try to hold them a little bit. So you have no business moving from paper trading to live trading before you prove to yourself that you can make money in paper trading. Because I tell them, if you don't make money in paper trading, it's either what I'm telling you is not working or you're making mistakes. That's where you make mistakes in the paper trading account. So you train. So basically, to answer you, it's education plus training in a paper trading account till you prove to yourself that you're not making mistakes and that you're making money. Anybody can learn this. It's not, I know it's very foreign and a lot of people never heard of options, but it's something that is beautiful to learn, not very difficult. And the good thing here is this, my method My system is called the growth system, and it's geared towards busy professionals. So if you have a 9 to 5 job, you don't need to be in front of the screen computer looking at charts all day. It only needs 15 minutes once you learn how to do it in a way that is responsible. Very important. It's not a get rich quick scheme. It's education and trading on a paper trading account.
Thank you. What are some key principles someone should remember when they are trading?
Okay. So for me, I like to call it first investing versus trading, because trading gives the impression that we're speculating. So the first principle is that you're actually investing in a business. So if you're buying an Apple stock, you're actually buying part of Apple. You do not want to buy a stock or a company that is bad. Same as you don't want to buy a property that is negative cash flowing and being a burden on yourself. So the first thing is that you treat it like a business, which means you need to learn the business. You need to learn how to evaluate stocks. And very easily, by the way, very easily with some screeners, we can figure out what is the good stocks. So number one is figure out what is good stocks. This should be done on only good stocks. And for me, like Warren Buffett says, you only need 10 or 15 stocks to do this. So that's number one, education. Number two, you need to train on a paper trading account. Number three, you need to balance risk and ROI. If your account is $2 million or $5 million, the way you can approach this is very different. If you have account of $10,000 and $10,000 is your life savings, you have to be less risky in account of $10,000. So you really need to, as I tell my kid who's learning how to drive, getting the car to move, which is basically an analogy for making money, it doesn't need anyone with big brains. It's easy to do. If you just push the pedal on the car, it will move. The whole game of learning how to drive a car is what? Is not to be involved in an accident. So for me, 10% is the strategy of making money. 30 or 40% is how to preserve your money, how to risk mitigate, to understand that if you're in a car, there is a possibility of an accident and you need to risk mitigate. We risk mitigate by going through driving exams, going to driving school, buying insurance. We do all this stuff. We need to be defensive in driving to make sure that we don't lose money or don't be in an accident. So always be aware of the risks and risk mitigate, because if you're blind, like a 2-year-old crossing the street, if he or she is oblivious that there are cars and there's a possibility of an accident, just a matter of time that you're going to lose money. So these are the main things.
Thank you. What are the top principles to avoid costly mistakes when investing in stocks?
Number one, it is not a get-rich-quick scheme. And part of that is that if you bought into the idea that you can make money very quickly, again, it's a matter of time that you're going to be in an accident. If you think you can go, let's say I'm going to Montreal, I'm in Toronto, it's 5-6 hour drive. If I think that I can reach there in 2 hours, what will this translate to is that I'm going to be driving the car very fast, and most probably I will not be there because I'll be in an accident. So number one, it's not a get-rich-quick scheme. And number two, you need to learn how to do it properly. Number three, it takes time because compounding takes time. You can generate income each and every month, on average, again, 2 to 5%. But again, you need to risk mitigate and be responsible. Like I advocate for responsible investing. It's not speculation, and it's not looking at the market every now and then, looking at being so nervous that Apple went down. Meta, for example, is a very good company. Facebook, at some point it was $400. It went down to now $80, but that's normal. We need to understand the normal market behavior, that it goes up and down in the short term. Short term is we don't look at all. In longer term, in a year or two, Meta became $700. So if you don't know that Meta is a good company, the normal behavior, by the way, Lily, for people is that they buy stocks at the peak and they sell at the bottom. It's very weird. The normal psychology is very weird. So you need to understand how the market behaves and how that you should not be doing what everybody is doing. Because what everybody is doing is that they're buying when it's really high because they think it's a good time to buy. And because when it goes down, they think they want to cut losses and sell, which is the opposite. Warren Buffett does the opposite. He waits for it to go down, which is normal, like logical. Wait, it goes down, and then you buy when it's down.
Thank you. Tell us about your growth system that you use to create side income and build time and financial freedom.
So the growth system is advocates again for responsible investing. The first thing is G, which means goal setting. So you need to level set your goal. So if you need to go from a city to a city and the normal driving, according to the rules, it's 6 hours, you don't have a goal of going there in 2 hours. So you set your goal to 2-3% per month. That's 24 to 36% a year. That's really good. So that's number one, goal setting, because wrong goal setting, everything else will not work. Number two, has to do with research stocks. I have a very simple way anybody can learn to figure out the good stocks from the bad stocks. I don't care how sexy and nice the products of a company are. If the company is not making money, it's not a good company. It's not a good company. So R is for research stocks. Number three, O, options mastery. You need to understand options because it's a little bit foreign. So you need to understand the terms. What is a put? What is a call? What is a naked call? What is a covered call? What is in the money? All this stuff, it's very hard in the beginning to grasp. But when you hear it 10, 15, 20 times, you will learn it. Number four is W, win through implementation. You need to train through a paper trading account. Because if you know the knowledge, but you're not training, it's like taking a course about how to ride a horse. You will never know how to ride a horse except when you're on the horse. And that's where the 12-week mentorship program came. And then last thing is psychology. You need to manage your psychology because, again, the normal people buy high, sell low. We need to be in control of our emotions and treat it like a business.
Thank you. What's the best way to find a good company to invest in?
Okay, so let's start with the definition of a good company. The definition of a good company is that because it's a business, businesses are evaluated on their ability to make money. Okay, so that's the bottom line. It's not by how nice the products are. Like, for example, Apple does not have the best cell phone. Samsung does, but I will never buy except from Apple. Why? Because of so many other reasons. So the main thing is we need to look at earnings. So we need to know how to learn, and this is something I teach, how to read quickly the balance sheet, income statement, and cash flow. So in income statement, we need to look if they are making earnings or not. A company like BlackBerry, when you look at their income statement, you will see that they're losing money. It's not investable for me, even if I like BlackBerry as a product. So first thing is earnings, and we look at also free cash flow. It's like two families. One of them has much more cash flow than the other. The family that has cash flow, they can go for trips, they can buy stuff, same as with companies. If they have free cash flow, they can invest in new technologies, they can acquire new companies, they can give dividends, they can buy back stock. So we look at earnings, we look at free cash flow, and we look that the company has a big moat. Moat means it's not easy to come and take their market share. It's very difficult to take the market share of Facebook or Amazon or Apple because people have loyalty. And the people who have big moat, they can increase the prices of their products, make more money even if the times are hard. So earnings, free cash flow, moat. Also, we look at companies that does not have a lot of debt. So these are just very quickly some of the ways you can figure out what is a good company. And I know there's 6,000 stocks, but we have screeners, automated screeners, free screeners that I give everybody that they can actually, the 6,000 companies, they can put them into 50 very quickly. And then from the 50, they can choose 10 or 15.
Thank you. What's the best way to master the psychology of the investor that makes money?
The best way is to trade in a paper trading account so that you can go through the emotions. That's number one. Number two, you need to have somebody look at the trade. So part of the 12-week mentorship program that I do, it's a small group, like 5 people or 6. And every week in the mentorship program, it's not just theory. Everybody has to share their paper trading account and go through the trades they did. And then we talk. Did you do the right thing? What should you have done there? And part of the mentorship that we do here is to level set the psychology. So I did that because I was afraid that this happens. Correct. But look at what the results. What should you have done? So for me is understand, like learn the wrong psychology patterns, like everybody in the market buying high, selling low. Understand this so that you don't make the same mistake. You need to train in a paper trading account so that you're safe. Make the psychology mistakes in the paper trading account and get somebody to look at what you're doing so that they can tell you if you should have behaved differently. And if you made the mistake once or twice, you don't do it in your live trading when you go to your live trading because you learned from your mistakes.
Thank you. What's the best way for someone to master their anxiety, their fears that will inevitably trigger when seeing their stock is tanking?
Okay, very important. So it's the same, for example, when I look at my son. If my son did some mistakes and got some bad grades, I'm not gonna just give him away for adoption, right? Because he's my son. I know he's a good person, right? Same thing with the stock. It starts by I don't get involved with stocks except when I know they're good stocks. So do some research, understand the definition of a good stock. And once you have a good stock, the second thing is you need to understand market behavior. The market does not go up in a straight line. The market goes up and down. It's like the sea. There are waves going up and down. The waves go up and down does not mean that the sea, like if the waves are down, doesn't mean that the water evaporated. It's there. It's just a wave. The market breathe goes up and down, up and down, up and down. So we need to understand when the market goes down, there is nothing wrong about it. There is nothing wrong, Lily. We think there's something wrong, but there's nothing wrong. So in the example of Meta, that it was $400, and then in a year went to 80 because of COVID and some other stuff, has nothing to do with the ability of the company to make earnings. So if you have the conviction that the stock is good, and if you see it's down, instead of you being anxious, you will be thinking of the opposite, Lily. How can I buy more? I know it's a good company. And Peter Lynch, one of the great investors, said that there is 100% correlation between the value of the company, if it's a good company, and the price of the stock on the long term. Means long term in stocks is 5 years. And there is absolutely no correlation between the value of the stock and the price of the stock in the short term. Short term is 2 years in stocks. So in 2 years, short term, the price of a stock can go down, like Meta went down 80%. But for people who understood that this is a good stock and bought more or held to it, in another year, it went to $700 because it's a good stock with good earnings. So the price of the stock short term is very erratic. I tell my students that it's like a drunk person's every day assigning prices to different companies, but he or she is drunk. He doesn't understand. It has no logic, which is something that people need to capitalize on, that the prices of the stocks has nothing to do with its value. So if you understand how to evaluate a stock, it's like a property, you know it's $500,000, but you wake up in the morning and it's 100. If you know that the value is 500, you will be dying to go and buy this property because you know the true value. So by understanding that the stock is good or bad, understanding that the market behavior, it goes up and down on the short term, has nothing to do with the value. And now your mentality switches. Instead of me wanting to sell the stuff that went down, all what you need to ask is this a good stock or not? If it's good, I'm going to keep it and buy more. And that's it. Basically, it's actually simple.
Thank you. How can an investor make more money during a downturn versus on a time when the stock is going up? Can an investor make more money through shorting or other techniques that you teach?
So we don't do shorting.
Aside from the actual long-term increase
Correct.
value.
Yeah. So what I teach actually is not buy the stock and wait for it to go up. I do options, and in options, you make money by going through contracts, like the example I told you, in like 30 days. And the worst thing that can happen, like the reason we sell options is that the probability of us making money is like 75-80% versus if it goes on the other side, it's about 20-25%. So let me just say this. If I tell you that if you buy this lottery ticket, you're going to make humongous amount of money, $50 million, that's huge ROI. But the probability of me making the money is almost zero because it's so low, correct? That's buying options. In buying options, there is unlimited profit, same as the lottery, but the probability of it goes my way is about 20%. If I sell options, the probability of me winning is 75-80%, and it has limited profit. I'd rather win a lot, limited, and this limited is 24-36% per year. It's really good, than to go to the buying options. So that's number one. Number two, by selling options, I have this income coming to me each and every month. And so if I do, basically we don't do shorting, we sell options. And because we only invest in good stocks, the way to make money in good stocks is that when it goes down, you buy in tranches. you buy more only if you believe that the company is good. Okay. And this is how millionaires are made, by capitalizing on. A lot of people in my students, they leave part of their portfolio cash, just waiting for these moments.
Thank you. Tell us your top 3 successes related to investing in stocks and options, or you can also mention 3 of your top case studies of other entrepreneurs or investors that you've coached or that have learned from you about how to do this, and any kind of like success that they've had with this method.
Okay, so like if you're asking about my performance, for example, in the last 2 years, I made 75%, but that's not typical. 75% per year, but that's not typical, because I don't want people coming thinking that they're going to do that. I have a lot of experience, and anyway, so myself in the last 2 years, I did 75% year over year. That's number one. My biggest successes personally is when I see someone who is risk averse, who is so afraid going into this program, never really invested in stocks or options before, and I see the transformation for them. Like I just had a cohort that graduated, 5-6 people, and again, I'm very strict that they have to do paper money in the beginning, in the 3 months. So they just graduated and started making money. They started live trading. They funded their account, and I was just with them like 5 days ago on the phone, because I like to be with them in the first live trading account as just for moral support. And they're starting to make money. So that's a huge success. One of the case studies that I have is Zalamia. She, again, went through paper trading. Her account wasn't that big. And she sent me this very nice testimonial saying that she had a goal of just, she works shift work. And she had this goal of just replacing one shift. And she was so happy, like replacing the shift with $500 with just the first put she did. I have people with limited account like Zalamia, and then I have other people. Actually, I have people who run funds, like people with like $100 million under their account, that want to learn these options because it's a great way to make money too.
Thank you. Tell us, what's the minimum someone would need in terms of money to get started with the investing in stocks and options?
Okay, so what you need in the beginning is zero, because we always start paper money, right? That's the responsible thing to do. But once you finish and you are ready to fund your account, with options, it is $5,000 to $10,000, because it needs a little bit of capital in the beginning. So $5,000 to $10,000 for options. For stocks, it can be much lower. But of course, your ROI is a percent of your capital. So what I usually do is, you have to start a few months with paper trading, and regardless of your capital, let's say you have $2 million, you should only start with 10K. Prove to yourself that you can make money with 10K, and then you graduate to 20K. So take it slow, take it being responsible. The hype of making money quickly that's part of the psychology. You need to control your greed. You need to control, you need to be responsible, like looking at it as a business and going slow.
Thank you. Where would you go to find potential companies to invest in? Is there like a listing somewhere that kind of
so what we do is, if you know what you're looking for, there are free screeners. Screeners means it's like a website. You tell the website what parameters are you looking for. Like, for example, I want earnings more than 5%. I want ROIC of the companies that more than 5%. And every time you put one more variable, it throws hundreds of companies out. So if you just tell the screener, I just want companies with positive earnings, just positive, not good, just positive, it will throw away something like 1,000 or 1,500. If I want companies with good ROIC, like maybe more than 10%, it will throw away some. If I want that the increase in earnings in the last 5 years are 5%, like not only that I want them to make money, I want the earnings, the profitability is increasing the last 5 years, it will throw away. So you can put all the parameters that you want, and it's very quickly going to put it down to whatever you want. You can have the parameters more strict, and you can figure, like, you can end up being with 10, 15, 20, 30, whatever you want. So that's a very easy way to get it. It's not very difficult, but you need to know what you're looking for. You need to know what you're looking for.
Thank you. Which websites would someone go to find screeners?
Okay, I can just search for one right now. So if you just go to Google and write screeners, I should have been a little bit more prepared. I actually can send you a link that you can give to your folks as well. I can do that, and it's free. You don't have to pay anything, and it's I'll send you one after the call.
Thank you. Tell us about your journey of how did you start doing this, and what motivates you to continue?
Okay, so I'm an engineer, by the way, and all of my life I was a good student, a good worker. And though I worked in a lot of multinational companies like Celestica, BlackBerry, and a lot of other companies, but most of the time my salary, though my salary was high, I wasn't really swimming in cash. I wasn't rich. And from a young age, I read the book Cash Flow Quadrant by Kiyosaki. Everybody should read that book. And I understood that just being an employee will not cut it. I have to do something more. I learned that there are three main ways to make money: stocks, real estate, and owning a business. I started by real estate, so I have a nice portfolio of cash flowing properties. And one of the things that I believed in is that anybody who's investing in stocks is a gambler, and that's not responsible. But I went to a course about options once just to prove to myself that I'm right and these guys are like gamblers. And I was pleasantly surprised. I learned that there's ways to do it properly. There are ways to learn how to do it without gambling or speculating or treating it like a casino. The reason people lose money is because they're treating it like a casino, or they have a get-rich-quick mentality. So I did the course. I did very well. They asked me to start coaching people. So I'm coaching people for the last like 10 years. And last 6 months, I actually made a company called Legacy Wealth Builder Academy. And the objective of the company is to target and teach people and get them out of the 9-to-5 rat race, is to get people another option. I love helping people with their financial well-being. It's a mission that I like, for me, even if I'm not getting any money, I would do that anyway, because I like helping people in this space. This is what keeps me going, is that it's something I like to do. By the way, I'm a professor as well. So teaching is another passion of me. And this was a really great thing for me to put teaching and financial well-being of people. And like the people that are coming out of the program are really, really helpful because I really care about them. A lot of people, when they buy courses, Lily, they buy a course, and the stats that I have is 95% of the people who buy a course, they don't finish it. So what I do here, it's mentorship. It's a lot of hand-holding. I meet with people for 2-3 hours every week to make sure that you're successful and your ability to make money is not hindered in any way.
Thank you. What are the top habits that any investor in stocks and options should aim to have in order to have a fulfilling and exciting and successful investing experience?
Okay, so we don't go for exciting at all. We want it to be boring. We don't want exciting at all. So because like if you're going for the adrenaline rush, it's more of the speculation, the lottery thing. That's not what we do. We're boring people. We want it to be steady. So some of the habits is, number one, is that you need to be responsible and understand that this is a business. You cannot be responsible if you're buying a property without checking if it's cash flows or not, right? So number one, you need to be responsible and understand, resist the urge to treat it like a lottery ticket. Okay, so that's number one. Number two, never lose sight of the risk. Every time you go into a car, you should not lose sight of the risk involved. You have to put your seatbelt. You have to drive safely. You have to account for other people's mistakes, because this is what responsible people do if they don't want to lose money. You need to be responsible. You need to control your greed, because a lot of times, this is what happens, Lily, is that when you make money for 6 or 8 months, you're making a lot of money, good money. Sometimes, and I made the mistake, you feel invincible. You feel that you got it all. You understood everything. So you need to be humble and you need to never lose like the risk mitigation rules that you learn. You have to stick by, and you don't need to be greedy. If you're responsible and you have work ethic, like basically it needs a bit of time to learn this stuff, and you do your own diligence, which is not much. It's like 15-20 minutes a day on your cell phone. Like sometimes I was in Disneyland with my cell phone. I'm putting a trade to get the money for the trip. So Be responsible, be disciplined, resist being greedy, and never lose sight of the balance between ROI and risk.
Thank you. Are there any apps or routines or anything that potential investors should put in place to make sure that they're accountable for their own success in investing in stocks?
No apps. I don't like in the beginning for anybody to subscribe to any apps. So most of the stuff that I use is free. Because you can get it free, like the balance sheets, the income statement, you can get it in Yahoo Finance for free. The screener, I'll send you one for free. So a lot of things are actually available. It's just that you need to learn the proper way of using it. But no, like for me, no subscriptions needed to anything, especially in the beginning.
Thank you. Tell us where entrepreneurs and investors can find you.
Okay, so my company name is Legacy Wealth Builder Academy. So you can go to the website, Legacy Wealth Builder Academy. They can email me at info@Legacy Wealth Builder Academy, or they can just connect with me on LinkedIn, Fadi Habib.
Thank you.
Follow us for more interviews with world's most influential business titans, providing you with the insights to awaken to your full potential so you can get paid to be yourself, find true happiness, and manifest anything you desire.